You are on the Transparent FX Academy. I'm Nick and I'm a top podder on TradingView, and in today's video we will be breaking down a pair both from a technical and an order flow perspective to understand where are the best probabilities on it for a trading opportunity to obviously capitalize on the next move of the pair. So the video will be very educational and practical, so without further ado, let's get straight in it. Okay, so let's make a full breakdown of the situation that currently we have on gold to see where is the next opportunity for this commodity and how we can be looking to capitalize on the next move for this market. Now, as usual, I will keep the analysis as educational as possible. So first, I will be covering the technical aspect of this market. We will then go and see what is going on from a COT perspective, so commitment of traders perspective, which is the order flow. So basically what hedge funds and the big banks and institutions are doing in the gold market. And obviously, if you're able to read how they are shifting their positioning in time, you do have an advantage over your competition in the market. And by the end of the video, you will have gathered a lot of knowledge and you will also know what kind of opportunities we can be looking for in this market. Now, without further ado, let's get straight in the analysis. Now, starting here from the monthly time frame, what we can see is that the market has just provided a quite strong impulse to the upside. Now, after an impulse, we expect a retracement, and that is exactly what the market did. But if you want to measure this retracement, what you have to do is take your Fibonacci from the low to the high of the impulse. Now, if we do this, if we take our Fibonacci from the low to the high of this impulse, what we can see is that the market has retraced all the way down to the 50% of the Fibonacci taken on the monthly impulse. Now, in general, after an impulse, you expect the market to create a retracement at least to the 0.32 of the Fibonacci taken on the monthly impulse. But in this case, the market retraced even more. It retraced all the way down to the 50%. So we had a quite massive retracement, and we can now expect that the market has actually gathered enough momentum and enough liquidity to create a strong rejection and possibly complete the pattern, which is the impulse correction and impulse pattern to the upside. In fact, generally speaking, when you have an impulse in the market, you expect a retracement at least to the 0.382, and after the retracement, you expect the continuation to the upside for the completion of the pattern, creating another impulse to the upside, which prints a higher high in the market. So on the monthly, everything is bullish, and we do expect more continuation to the upside. Going down on the weekly time frame, what we can see. Now, from a weekly perspective, we have a quite different scenario. In fact, on the weekly, we can see that currently we are testing quite strong weekly resistance. In fact, all this zone was previous weekly support here, again, weekly support here, and all the support is now turned resistance here. So on the weekly, we are currently testing previous support, which, as you know, in the market, after support is broken to the downside, support is turned resistance. So currently what we are testing is the previous support turn resistance. Now, one very specific thing that we have to pay attention to is that this candle here, this weekly candle that we are currently trading in, has still 3 days and 8 hours to go before it will actually close. So if you're thinking, okay, this level of resistance is already broken to the upside because the market is above the zone, that is not really the case because, as we have just said, we still have 3 days and 8 hours to go before this candle will actually close. So the break of the resistance is still not confirmed. The market can still easily continue to the upside. So at the moment, we are trying to break above the resistance, but from a weekly standpoint, we are still testing weekly resistance, even though we are above it, because the market can easily still reject this area to the upside, and all this move to the upside will just become a wick. Going down on the daily, what do we see? Now, from a daily perspective, situation is extremely interesting. We had spoken about gold quite a few times in the past. I spoke about gold when the market was here, and I made a full breakdown explaining all the reasons for which from here we wanted to see the market create this move to the downside to test at least this area here. Now, this area was this red candle, which is a strong demand zone at which we expected the market to create a retracement to, and that is in fact exactly what the market did. The market even exceeded this downside target, creating this impulse to the downside that broke below this support. After the break, what did we expect? We expected the market to create this head and shoulders and make this move to the downside. In fact, I made another breakdown of gold when the market was here, explaining all the reasons for which we wanted to see the market create this move to the downside. Then again, after the creation of this W formation here, so impulse correction, lower low and higher high, I made another breakdown explaining all the reasons for which we wanted to see a move to the downside to complete the W formation. This is what generally you expect after the market creates an impulse correction, lower low and higher high. You want to see the market create a retracement at least to the 0.32 of the Fibonacci taken on the last overextended leg of the W formation. And again, that is exactly what the market did. Now, I will link all this previous analysis in description. So you find all this previous analysis linked in description, so you can go and check it out for further reference and more free education. But at the moment, what do we have and how we can be looking for the next opportunity on gold? Just a quick reminder, make sure you comment below and you let me know which pair or topic you would like me to analyze or cover in my next videos. Now, at the moment, what we can see from a daily perspective is that the market is currently providing an overextended W formation. Now, after an overextended W formation, what you want to see is the market provide a retracement at least to the 0.32 of the Fibonacci taken on the overextended leg, as I have already said. So we expect the market to give us a retracement to the downside after this massive impulse. Now, what we can see if we go and check this COT data, so the commitment of traders, is that at the moment gold is very bullish from an institutional perspective. In fact, we can see that hedge funds, so the biggest speculators in the market, have added 13.9k long positions with the last report, increasing net positions all the way up to 269k, with currently 338k longs and 69k shorts from an institutional perspective, with a 61.6% long exposure and 12.6% short exposure. So gold is very bullish at the moment from an institutional perspective. And we can expect the market to provide a continuation to the upside, as we already expect from a monthly perspective. But given the current patterns that the market is creating on the weekly, that has a resistance area, and on the daily that has this overextended W formation, given these patterns, we can expect the market to first provide a retracement, specifically to the 0.32 of the Fibonacci taken on this impulse leg. So there is the possibility to be looking for a short-term shorting opportunity in this market. And how we will be looking to approach this opportunity with students. Now, as usual, the monthly, weekly, and daily timeframes are the best timeframes when it comes to the directional aspect of the market, combined with the COT data. But the best time frame when it comes to confirmations and entries is the 4 hours. And at the moment on the 4 hours, everything is massively bullish. The market is creating higher highs, higher lows, and all the bullishness that we have from a COT perspective, as we have already said, all the bullishness that we see, so the 13.9k longs added with the last report, are clearly reflected in this 4-hour price action that is showing very, very, very strong bullish momentum. So at the moment, we absolutely cannot be looking for any kind of shorting opportunities, because even though the patterns are there from a weekly and daily perspective, on the 4-hour time frame, there is no confirmation. So we would simply be not reactive if we just shorted from here. And as you know, trading is not predictive. Trading is reactive. So what we will be doing with students is waiting for the proper confirmations to present themselves in the market before we are to be considering, even only considering, any kind of shorting opportunities. And how we will be doing that? Well, with students, what we will be doing is monitoring price action from a 4-hour perspective during this move to the upside. So we will be monitoring price action with students from a 4-hour perspective during this move to the upside, waiting for the market to shift from a 4-hour bullish market as we have right now to a 4-hour bearish market. And as soon as the market will shift from a 4-hour bullish to a 4-hour bearish market, at that point, we will be adding gold on our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities at that point for the move to the downside and for the market to retrace at least to the 0.32 of the Fibonacci taken on the daily impulse. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you. You can also go and check out the mentorship program. You find the link in the description. You will first learn all my rule-based strategies, and then you can trade them live with me. Every single day you get a new daily market breakdown showing you exactly how to apply the strategies with entries, stops, take profits, as well as having me answering all questions that you have every single day, including the weekends. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in it.